Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Monday, January the 13th, 2014, and here is today's After the Bell Market Summary video brought to you by wallstreettrading.com. Just a quick reminder, if you have not been to the website yet, go check it out. There's a lot of free, informative information on the site that you can find under the blog section. At the same time, if you are possibly interested in taking our education course or joining our proprietary trading firm, for some of you guys out there that need that buying power and that leverage and want to work with a great community, you can contact me at ccooper at wallstreettrading.com, or you can contact us via the contact us button on the upper right hand side of the home page. Aside from that, we have a lot of things to cover today. The market did give us some nice interesting action, and we want to make sure we cover every corner of the market. Well, not every corner of the market. We want to make sure we cover the key things to look at going into tomorrow's session and the key levels to watch. So let's go ahead and get it started. Again, there was red across the board, folks. I can just go ahead and bring up the heat map on FinViz. You can see that for yourself. Look, only positive area we had in the markets today was like Merck up 6.5% today, and some other areas where, HPQ was up, Red Hat Q, Apple ended up closing the day positive. But overall, you can see there was blood all over the map here. With the, I would say the worst sector today had to be the basic material stocks, and these stocks, they had been showing us some weakness to begin with going into this day. So it definitely had some follow-through action on those basic material stocks that had been showing weakness. That definitely was a group to look at if you were looking to short some stocks today. Technology was weak today. Financials were weak today. Definitely showed their weakness this morning out of the gate. Biotechs were interesting a little bit, and then utilities were weak. So everything was pretty much let's get out of these stocks and go into cash or bonds, or just get out the market in general and just wait on the sidelines till we see what could happen here. And of course, let's not forget, this is all coming off of the jobs number that we had on Friday. Now they didn't sell the number into the they didn't sell the jobs number on Friday, but they sold it today, and we're going to see what this brings going forward. So I'm going to go ahead and take out this little Fibonacci pivot level that I was doing right here. Remember, we were discussing the fact that the pivot low that we were working off of that we have to watch is going to be the low from last week Monday. So now that we broke that pivot low, we're actually in a downtrend, a short-term downtrend. Why is that, you may be asking? It doesn't look like we're sideways. Well, no, we have a high, then we have a low, then we have a lower high, and then we have a lower low. That's a downtrend. And we actually closed below this lower pivot low right here. So we have a little bit of confirmation. Of course, some people like to wait for that double confirmation. If you ask me, this little range that we were trading in for about 1, 2, 3, 4, 5.5 weeks or so, we were holding on top of it for about 1, 2, or 3 weeks. So a 5.5 week range that we broke out of and was holding above it for for 3 weeks, but we were not even really trading up. We were just trading sideways. So think about it this way: these people that are long above this 181 level, or call it 182 level on the S&P 500, or the spiders, I should say here, the SPY. If we get some more selling pressure tomorrow, they may tell themselves, hey, let me get out for a small loss right here. And then if we break back below 182 in this range right here, those people may say, hey, it's time to get short. The market's going to come in a little bit for a couple days maybe. So there's going to be two different types of sellers. So we could have another big down bar tomorrow right into this rising 50-day moving average that we have around 179.94. Just go ahead and call it 180 on the spiders. At the same time, that also lines up with this next pivot level that I'm going to give you guys to watch. A key technical level here, a little short-term key technical level from this last pivot move is going to be around will be around 180.52. Now, why is that important? Because again, we have a move up, a move down that form that higher pivot low. Then we have a move up, move down, and move up, and this is where the downtrend starts. Right? We have a high, a low, a lower high, and now we have a lower low on a closing basis as well below that pivot right there. So again, the next pivot level that people are probably working their stops underneath, of course, will be right here around the 180.52. So look at that level tomorrow. If we were to gap down tomorrow and open up around that level, I would assume that we'd probably get a bounce, and then they'll probably try to short their bounce or something like that. But again, let's not forget, anybody that was long last week, they're currently in a losing position, right? Even if they bought on Monday at the end of the day, they're still in a losing position. All right, let's not forget about that. Last but not least, this nice little upward trend line that we've been tracking pretty close here. Let me go ahead and take off the studies. This is our nice little upward channel. All right, and actually bring up a 2-year daily chart. I'm going to go over some stocks, guys, so bear with me here. Let me just go through all the technical stuff we must pay close attention to. Let's take a look at this nice little upward channel that we've been tracking since the start of since January 2013. Nice little upward channel, nice little upward channel, nice little upward channel, holding steady, holding the bottom, holding the bottom. So guess what? We get some funny action now near the top. Let me zoom in now for you guys here. So we got this action near the top of the channel. You can see it was acting as resistance before. And what did it do? It came right back in. Acted as resistance right here. It came back in. Resistance. Came back in. Till this time, they broke it above that trend line. Sucked in some longs, or, some people bought up here, of course. And then now we're back below the top of that trend line. We broke back down. We rallied back into it. And now it formed a lower high and got rejected at the trend line here. So what are we going to be paying close attention to? Well, you guys know how I like to draw the 50% trend line of a channel. All right, so that's going to come in somewhere around, let's see here. If I have 1, 2, 3, 4, 5, 6, about 7 boxes there, I can go ahead and duplicate this. I usually do it in a more technical way, but I'm just going to do it like this for right now. Well, it's not anything too crazy technical about it, but let me see here. I have a drawing tool. Let me see 1 second. Bear with me. So I'm going to go ahead and redraw this as a channel. And now you can see the 50% trend line of the big channel is going to be around here at the bottom of that range. We have this consolidation right here that led to this breakout, and this nice consolidation again, this wider consolidation, slow consolidation that led to this other little pop-up that looks like it's going to get faded now. So this little action above 182 could be what we call a bull trap. Now, a bull trap. So now it's the first day, so we're not getting too crazy about it, but we keep on breaking these lower pivots, all right, and making these lower lows and these lower highs and lower lows. Then I can say, okay, we may have to start paying close attention to this thing and see what's going on here. But as far as it goes right now, this 178 level is going to be an area to watch. Again, that lines up with the 50% trend line of this big channel that we've been tracking here. It also lines up with the top of this earlier consolidation and the bottom of this consolidation that was formed on top of that consolidation. Yes, consolidation, consolidation, consolidation. Stick with me. So right now, the level to watch for tomorrow is going to be today's lows. Then you want to watch this 180.52 level. We break below 180.52. Then we're going to be looking out for this 180 area, which you can see comes into play from this little gap down and gap up, and then reverse right in front of that level. So that's another key level to watch, 180. Which of course that lines up with 1800 on the ES if you're trying to relate the spiders in the ES. And then below 180, 179. But however, tomorrow if we do gap up and we hold 182, then you can look for it to be an inside day. Again, we had some heavy selling pressure today. The volume did pick up pretty nice throughout the afternoon session. So, we'll see. I'm pretty sure the Bears will be looking for a follow-through day tomorrow, and the Bulls will be looking for maybe a slow chop session where we maybe try to flash below today's lows and then try to close back above the 182 level. In general, folks, above 182 tomorrow, I'll be neutral to bullish. Below 182 tomorrow, I'll be neutral to bearish. Neutral for the fact that we still have some stocks, and we still have that bullish sentiment, I think, in today's market. You can't just mark that out off on one day, especially based on what I've seen happen before. I mean, you have some guys that they'll go in all bearish tomorrow, and the next it's update tomorrow, and they get smoked. So keep an open mind tomorrow. That's all I'm saying. And let's take it like that. Taking a look at the ES action, I want to go over the ES on the daily. Remember, we're going to go through all the indices, and then we'll take a look at a couple of key charts. But don't forget, if you like the video, please share, like the video, share the analysis that we're giving to you guys here. All right, as far as the ES action goes, some key levels to watch in the ES. All right, we have this nice little range I'm going to highlight for you guys right here. All right, and if we break below that range, I have another level that we can watch. All right, which will be down there. But as far as the range goes, you can see if we held today that low of the range. If we would have closed below 1810, that would have looked a little bit uglier. Let's see here. So 1810. If we can hold above 1810 tomorrow, I'm going to be looking to possibly buy a dip. But if we start holding below 1810, we're going to be looking for that move down to 1800, which also lines up with that 50-day moving average, simple and exponential on the daily time frame of the ES, and then this little pivot point right here, which again, this is the same thing on the SPY I was showing you guys, this move up, this little lower pivot move right there, and then that move up. So this is the pivot low that people that caught this last leg up in the market, they're probably working their stop underneath that low for a break even or something like that. But keep an eye on that level right there. That level is going to be 117.95, and that's also a good level to watch off the moving average there. So definitely be looking to buy some ES action there. If we sell off tomorrow and we're extended from some moving averages intraday, we'll be looking to scalp that level right there. And you could catch that scalp with us inside of our live chat room, mywallstreettv.com. All right, let's go and take a look at the triple Q, the Nasdaq 100 ETF, down 1.5% today, down $1.29. Again, we highlighted this nice little steep upward channel to you guys in the week in review video that I did yesterday, actually. Came into the office on a Sunday and got that done so I could bring you guys a video. And good thing I did that because I was hopefully I was able to put some key trend lines and some channels and stuff into perspective based on what you guys are seeing. And you can see this nice little upward channel, accelerated upward channel that we've been trading in the Nasdaq since the 8th of November. You can see we broke that today. We got a nice little close below that. Again, one day doesn't mean anything, but we do same thing that we see on the SPY. Same thing for the triple Qs: a high, a low, a lower high, a lower low, especially a lower low close. Well, actually, we closed right on that there, so that doesn't look that bad as the spiders. But we are, starting a little short-term downtrend. The only thing on the triple Q is that it did not break below and it did not break and close below that pivot low right there. It actually closed right on it, so we're going to be keeping a close eye on that tomorrow. However, another thing to take note, this range that we had right here before the last push up, if we start holding below the 86.32 level, then what tends to happen is price action tends to get dragged towards the bottom of that little zone right there. So we're going to be keeping a close eye on the 85 level. 85, I do think you'll be able to catch a scalp off of for the fact that it lines up with the bottom of that range. That was a demand level before, of course, before they ran it up, and also lines up with that rising 50-day exponential and simple moving average on the daily chart there. Let's go and take a look at the IWM, which I believe was the weakest index today. It did get a nice little bounce at the end of the day there. IWM was down 1.37%. So the Nasdaq, then the IWM, the Russell, and then the S&P 500, and then the Dow. It was in that order as far as it goes from weakest to I wouldn't say the strongest, but to the one that held up the most since all of them got knocked down. All right, as far as the Russell 2000 goes, this one looks a little bit interesting because it's still holding this nice little consolidation range that we have up there on the IWM. All right, was not able to close below that range. It did make a little lower low, but it did not close. The IWM actually held up compared to some of the other indices today on a technical basis, based on the daily time frames. And we're going to see what takes place here because on the IWM, you can see the nice little channel that we've been holding as well on the chart here. Nice little upward channel. Guess what? We've been watching that 50% key trend line from the channel. And like I explained to you guys in the week in review video, if we start holding below that key 50% trend line of the big channel, we're going to be looking for them to take us down towards the bottom of that channel. Remember, above the 50 we're bullish, below the 50 we're bearish, above the 50 we're bullish. We start holding below the 50, we're going to be bearish for a move back down. All right, and that's what we're looking out for. So the Russell 2000, definitely you can see it looks vulnerable as well. And last but not least, let's take a look at the Dow Jones. DIA, Dow Jones. I would say the Dow Jones definitely has had some nice momentum in that since this last leg up. You can see nice little up move, little quick little 2-week downward channel right here that caused a nice little pop up. But notice how this is like an ABC move, and notice how the length of this leg right here did not even reach that leg up there. Matter of fact, one thing that we could do right now, I can actually show you guys some more advanced technical stuff here. And if you guys are looking to learn this stuff, we do teach this in a course on a monthly basis down here in Miami, or our New York office, or online. But you could take this low, right here, Fibonacci extensions. You take this low, all right, and then you take it all the way to this high, to that little pivot right there, and you can actually see how much that extension played out. So this leg up is what this extension measures, and you can see it. We rallied all the way to the 50% extension, and we started chopping around there. So they started selling it around that area. We almost hit the 61.8. So what does that mean? That means that this distance right here, you take 50% of that distance, and that's about how much we rallied up. So we did not rally the full move of this leg, which is usually what you do when you have an ABC leg up. All right. So now the Dow Jones looks like it's going to come back down. A key level to buy the Dow for some of you guys that like to trade those Dow stocks would be right here, right back on top of the channel. You guys see this nice little channel we have marked right here? All right, see the channel, see the channel. And we broke out, we back tested around that area, we held, and we got that's when we got that nice little markup right here. And so a retest of that area will be a good level to watch down towards 159. But even before that, if we can also catch some support before 159, right here at this 161 level, because it was prior resistance, could act as some support right here. Keep an eye on that level there. Now we don't really trade that much stocks in the Dow in our chat room, or I mean we do, but we don't really track the Dow, I should say, that much. We usually trade stocks in the Nasdaq, the S&P 500, some ETFs and stuff like that. But of course, we're going to be on top of this as well. So let's go and take a look at some key names. Then then I'll make sure I cover the commodities. Actually, let me just go ahead and cover the commodities now, guys. I know this again. This is going to be a long video for the fact we had a lot of action today. We have some things we have to go over, so just bear with us. And of course, you want to stay tuned in if you want to compare some of our analysis with yours. And, that doesn't hurt at all. So crude oil still looking pretty weak, guys. Again, this thing if this wants to trade lower, it can trade all the way down to 86. Below 92, this thing has support around 89. Below 89, it has support around 86. So keep an eye on that level there on crude oil. Taking a look at gold. Gold actually had another positive close today, another higher close. So we have 3 consecutive higher closes, as you can see. After this little leg up and slow pullback, we have 3 follow-through higher consecutive closes, and it looks like the gold looks like gold wants to move up towards this 1265 area. All right, and if the market sells off tomorrow, we're going to be keeping a close eye on the precious metals to see if they put that safe haven trade on and go rush to buy the gold. And if they do put that trade on, I will look at the physical gold, and rather than looking at those gold miners, folks, just keep that in mind, please. Let's take a look at the silver futures, SI. Again, silver technically is trading a little bit stronger than gold. I mentioned to you guys the fact this nice little downward channel for this key trend lines that we've been watching here. Silver's been consolidating this nice little upward part of this channel right here, and the fact that it's starting to hold above that level brings it to our attention. And if silver could break above this 2050 level with some nice momentum out of this little 8-week consolidation, 1, 2, 3, 4, 5, 6, 7, 8-week consolidation, so pretty much a 2-month consolidation here, we will be looking for the silver to make a nice move up towards, I would say, the 22 level. Maybe this is declining 200-day moving averages right here, so keep that on the radar. What else? Look at crude oil, and then let me take a quick look at copper, and then we can start looking at some stocks, guys. So quick look at copper. Copper got smacked down at the top of that range that we've been tracking with you guys here, around the 340 level. See all this resistance up here? Resistance in that area, got smacked down there again at the start of the year. And we're just tracking this right now. We'll see what happens with that. All right. Last but not least, currency action, then the stocks. Currency dollar down day today. All right. Actually, I'm going to take a look at bonds too. Euro action is going to take a look at that euro dollar. Of course, the dollar's down. The euro dollar had a nice little bounce today, even though it didn't close that strong. A little bounce off the lows today. We're still working off this high right here. This resistance around the 138 area. So we'll see how this plays out. If it takes out Friday's highs, we can maybe catch a nice little pop up in the euro and catch a trade there. For some of you guys that like to trade that euro futures contract, the 60 or the FXE via the ETF or something like that. But let's go ahead and talk about these stocks, because we've got a lot of things to cover here, a lot of corners of the market to look at. Apple was up $2.79 today. Got a nice little bounce right in front of that area that I told you guys to watch over the weekend. Apple gapped down right into our little zone that we're watching for this little demand accumulation zone we had right there. It gapped down right in front of that, about $4 in front of that level. They bought it up and it was able to close positive, but I don't think that's going to hold. I do think we at least get a test of this area into tomorrow's action. So keep an eye on Apple to maybe get another shakedown to see what happens in this little range we have right there. Apple, Amazon, nice stock. However, it needs to come down $6.68 today, down over 1.5%. Again, nice little high base here, doing the same thing, similar to Apple. All right, we had this nice little range that we broke out of that range. So Amazon, you can see it had a nice little bounce off that 390 level. However, I'm not sure if that's going to hold, especially if we get some nice selling pressure. And give me 1 second. And resistance up here around 405. So this could be a new range we're starting in Amazon before it tries to make a move higher, possibly. Again, these stocks are still in strong uptrends. I know they're a little bit extended from on the weeklies and everything. Well, actually, yeah, they are a little bit extended on the weekly breakout levels. However, people are looking to buy stocks. I think they're going to be buying technology stocks, financial stocks. So, I want to keep a close eye on these large cap technology stocks that have been doing pretty well. If you're going to short some stocks, you want to short the ones that have not been rallying when the market's been going up for the past 2 months or so, of course, whatever. Since the last wave down. I mean, the last wave down we had ended on the 16th of December, so we've been going up since then. So any stocks that have not been rallying since the December 16th to where we're at today in the technology sector, if you're looking to short technology or any other stocks, those are the stocks you want to hit. You don't want to hit the stocks that are just now pulling off the highs. You want to hit the ones that have been showing you relative weakness already. All right, just a heads up. Microsoft down 2.5% today. One of the other stocks in the Nasdaq. Let's not forget, Microsoft is in the top 10% holdings of the triple Qs or the Nasdaq 100. And Microsoft, nice little wide range bar to the downside. Looks like it wants to touch a 34 level, which is a 200-day moving average, if you ask me there. Let's see, Yahoo. Again, taking a look at some of these high flyers that have been performing pretty well in the indices just to see where they're located at. All right, Yahoo. Remember, Yahoo had its last move up. Nice little up move here. Nice little tight little downward channel that broke out. And of course, that did reach the extension targets. As you can see, the amount of this distance measures about the same amount of that distance right there. So that's a nice little ABC leg up. And now it just looks like there's some profit takers going on. Keep an eye on the Yahoo level around the, keep an eye on the 39 level on Yahoo, guys. All right, let's see. Netflix, another high flyer stock. Actually, Netflix actually got a nice little bounce off of this moving average right here, the 100-day moving average. However, you can see it sold pretty ugly off the highs. May chop around this 330 level before it tries to break down, possibly. We'll see. Not really doing anything there, but it did get a nice little bounce off that 100-day simple and exponential moving average. Tesla. All right, now you guys want to talk about some of these momentum names that have been in play for the past couple months. Tesla could be forming a lower high. Got like a nice high right here. You have a lower high, and this time you have a rounding lower high action that could be going on here. Keep an eye on Tesla. If it starts to hold below this 140 area, I would become a little bit worried, and I would expect it to maybe move back down towards the 130 area. Let's not forget Tesla does have a gap to fill right here between 133 and call it 126. If you guys forgot, I'm sorry, not if you guys forgot. If you guys don't remember, this gap came from when they came out with a report from I believe out of Europe or out of Germany, saying that the Tesla fires that happened in the car was because of the drivers, not because of actual engine or anything like that from Tesla. So whatever that means, just letting you guys know that's how that gap got there on the chart. So Tesla looks like it may want to roll over, and you have a little rounding action right there off that lower high, those lower highs that have been getting put in there. All right, going over technology stocks, guys. Going over technology action. Let's take a look at some of the semiconductors, see how those things close today. Qualcomm still holding a nice little tight high base from this most recent up move. Really don't see much going on right there. You can take a look at CLAC. All right, CLAC, little downward channel action going on there. They have earnings in about a week or so. Another one, Texas Instruments, and of course I want to make sure I look at Intel. Texas Instruments reversal right there, and has support around 41, as you guys can see from this little area right here. Prior resistance, now support on this side. And then Intel, nothing too crazy there. Rallied up, smacked back down a bit. All right, let's go ahead and talk about the financials now. Goldman Sachs. All right, Goldman Sachs coming right back into the top of the channel. Goldman Sachs, if it was to hold up above this 175 area, I do think it'll be a good buy, just for the fact we have a technical level here from the channel. Remember, resistance, resistance. We break out, so now it's support on this side, and now we would have to get a little bit worried if it was to break back below 174. And the level's not 175, guys. The level is actually 174. So if it was to break below 174, the next level to watch would be right here around 170, which was a little bit of a resistance before it finally broke through. 4 weeks ago. 1, 2, 3, yeah, about 4 weeks ago. So about a month ago. All right. So keep an eye on that level. I'm actually going to mark that right now. Going to mark that range for us here so we can uh, look at it going forward. All right, Morgan Stanley. Let's see what happened with this one. Morgan Stanley was forming a compression pattern of a triangle that could break to the upside, but of course, these things can also break to the downside. Duh, right? So the 50% trend line, the compression pattern, triple top action up here, you could say. So 32 is definitely resistance area. We have a range for the bottom of the range right here at 30. So even if Morgan Stanley gets some more selling, just know you have a nice level right here around the 30 level, 30 handle. But now if it breaks 30, then we got to be on the lookout for 29.50 and some of these lower levels down here, because we do have a nice little range that it formed right here before it broke out as well. As you guys know, I like to pay close attention to the ranges because that's where usually smart money is accumulating shares. And if it gets back down there, they may want to buy again. So the level to watch on Morgan Stanley is going to be down here around 29.50, which also, guess what, lines up with the bottom of this nice little channel that we have here. So if Morgan Stanley was to pull back and the banks were to pull back some more, 29.50, 28.70, this little zone right here would be a great area to probably take initial starting position or something like that. JP Morgan, one of the financials that have been showing some relative weakness in the sector. We talked about this in the weekend review that JP Morgan looks like it's a short because it was trading for 3 days inside of the big sell day on Tuesday, had a follow through day today. It also closed below the 20-day simple and exponential moving average. Wouldn't be surprised if it got some more selling pressure on a break below 57.50 towards this moving average right here, which is a rising 50-day moving average. Keep an eye on that, folks. And then Bank of America, I definitely got to make sure I go over Bank of America because it's going to be one of the names that a lot of traders are going to be looking to buy on a dip when it stops going down, if it does go down. Again, 1 day of selling doesn't really mean anything, so we'll have to keep an eye on it. But even if Bank of America was to go down, the level you want to try to pick it up around would be around this 1580, which was from this nice consolidation we had right here, before it actually broke out. Okay, and you can see from the ABC move here, Bank of America made it to the 78.6% Fibonacci extension level. So you guys can see how those that works and how they come into play. How a lot of people use them. So Merck makes sense to talk about this stock since it was up today, showed relative strength. They have earnings coming out in about a week or so. I think today it had some news about a drug or something like that. I'm pretty sure this was news related. And it closed up 6.5% today. Keep an eye on this for a fall through candle tomorrow, or try to look to buy that one on a dip. We'll be watching that stock tomorrow. Let's see here. The home builders, those names look pretty. Those names were looking pretty good last week. So let's go ahead and punch a couple of those names up. Lennar not really doing much. Just trading in the range between say 38 and 40. KBH not really doing much. I'm glad to see that these things didn't really sell off that much because they look like they were technically set up to try to push higher. And then Toll Brothers, which actually looks pretty good. You can see this one's just really trading in a range here. One second, I just put that range there like an idiot. You can see Toll Brothers just actually just broke out this little range it was trading in. And the longer we consolidate above 35, the more or less this thing looks like it's going to try to break out here. Nice little up move, sideways consolidation between 37 and above this 8-month resistant range that we broke above. So this could possibly be a little bull flag in the forming up right there. Let's see here. Again, guys, there's a lot of stuff to cover today. If I could keep on talking, but a lot of things look like they sold off today, so you definitely want to see how some of these stocks, trade tomorrow. That's why I think tomorrow we can maybe just have a pause day since we had some heavy selling today. Maybe get a little bounce, but a lot of people, they're just not going to go short tomorrow. They're going to wait to see how some stocks fall through and stuff like that. So I wouldn't be pushing the pedal too hard tomorrow to try to short the market. and be that one person on stock Twitch and say, hey, I'm short the market. Look, I called it. Like we were talking about in the office today, which is pretty funny because now everybody on stock Twitch is a professional short seller. Aside from that, folks, have a great day. Check us out on the website, wallstreettrading.com. If you're interested in joining our proprietary trading firm, contact us about that or our course. And if you're looking to trade other asset classes similar to like say currency or futures, you can contact me at ccooper wallstreettrading.com, and I can direct you in the right direction to do that. So have a great day, folks. Cheers.